Hey everyone, Warren Buffett recently disclosed that he sold nearly half of his Apple shares in his Berkshire Hathaway portfolio. That cut his stake significantly, and it has some investors concerned about why Warren Buffett is selling his shares and if it's time for everyone else to sell their Apple stock too. So in this video, I'll reveal why I think Warren Buffett is selling his shares, or speculate on why I think he's selling his shares, and I'll answer if this is an opportunity or if investors like you and me should start selling our Apple shares too. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Warren Buffett disclosed that the company sold billions of dollars worth of its Apple stock, reducing its holdings by almost 50%, from nearly 790 million shares owned to 400 million shares owned. And this is as of June 30th. So today, August 5th, the portfolio composition might be different, but the disclosures happen quarterly. So that's how you have these differences. Now, notably, you can see as of March 2024, Warren Buffett's Berkshire Hathaway portfolio had 789 million shares of Apple stock, and that was nearly 41% of the total portfolio value. And this comes after some selling as well in that quarter. So this new report where Apple slashed the shares from nearly 800 million down to 400 million wasn't the first time Berkshire Hathaway and Warren Buffett sold Apple stock. They reduced their holdings from roughly 50% of the portfolio down to 41%, and now they cut this in half also. So it's been a concerted effort selling Apple stock from Warren Buffett and Berkshire Hathaway. They've been doing this roughly the last 6 months. And while Apple remains the firm's largest stock holding by far, Buffett already reduced the stake by 13% earlier this year. This is before the most recent sell-off. And the reasons Warren Buffett gave or hinted at was that he didn't mind selling a little Apple stock for tax reasons. Now, let me elaborate on those tax reasons. Warren Buffett has owned Apple stock, or Berkshire Hathaway has owned Apple stock. They started buying it in 2016. Apple shares are up significantly in that time. So Warren Buffett in the Berkshire Hathaway portfolio has a large capital gain associated with Apple stock. And you can see at nearly half its portfolio before the selling started, that's a large capital gain. And so you've got to pay the capital gain tax when you sell the stock. And so the selling time is a strategic decision. Now, by signaling that he's selling the stock right now for tax reasons, what Warren Buffett is insinuating, or what you can infer from this decision, is that Warren Buffett expects tax rate to be higher over the next few years. So this is a forecast, this is a protection against higher tax rates. So you sell the stock now, you pay capital gains tax now at whatever capital gains tax rate is currently paid by Berkshire Hathaway, somewhere in the range of 20% long-term capital gains tax rate, and you avoid paying a potentially higher capital gains tax rate a couple of years from now. Now, there's been a lot of talk among politicians increasing the tax rates, especially among Democratic politicians. They want to increase tax rates. And so Warren Buffett is saying, well, let me sell now and avoid that potential for higher capital gains taxes later on. And now, as to whether or not I think tax rates are going to rise over the next few years, I think there's a reasonable chance they will. The U.S. deficit is growing out of control. The U.S. government is in more than $30 trillion in debt. And one of the ways to pay down that debt is through higher tax rate. Now, that's not a popular decision, and it won't go along very well with citizens, but it might be one of a few options the government has for reducing the growth of that debt, the growth of that trajectory. They're not going to pay that all off all at once or in the next 5 years or in the next 10 years. That's highly unlikely. But with higher tax rates, they can slow the growth or potentially reduce the value slightly. And so I think this is a prudent decision by Buffett and the Berkshire Hathaway portfolio, especially because it was coming from such a concentrated position. If Apple was only 5% of the portfolio, then that could have different implications versus it being close to 50% of the portfolio, 50%, and trimming it down from there. I've been talking about Berkshire Hathaway and the concentrated portfolio and how it's not advisable for investors like you and me to hold such a concentrated portfolio because you fail to capitalize on the diversification benefits of holding a diversified portfolio. Your risk-adjusted return could be better if you diversify a broader selection of stocks, a more equalized split of all the stocks in your portfolio. But I've also highlighted that Warren Buffett is not your everyday investor like you and me. Warren Buffett is the absolute best, well, arguably the best investor of all time. And so he can do things that are not advisable for you and me. It's one of those situations where it's like, I can do it, but don't try this at home, right? That's what Warren Buffett does with his portfolio and his portfolio of investments. So that's, the reasoning behind, or my speculation on the reasoning behind Warren Buffett is selling Apple stock. You notice how I didn't talk too much about whether or not I think Apple stock is undervalued or overvalued. And it's because that investors like Warren Buffett, sometimes they buy and sell shares for reasons other than thinking it's overvalued or undervalued. And this might be one of those scenarios where it's not really about whether the stock is overvalued or undervalued. This is more about portfolio positioning and tax consequences, capitalizing on the lower tax rate today and avoiding a higher tax rate potentially next year. And on top of that, reducing the portfolio concentration and reducing the portfolio risk because you won't be so exposed to just one investment. Of course, if Warren Buffett thought Apple stock was extremely undervalued, he probably wouldn't be selling it. But I think we all know that Apple stock is not extremely undervalued. I think we can all agree that Apple stock is roughly fairly priced, maybe slightly undervalued at current prices, or maybe slightly overvalued. Whatever the case might be, there isn't a gross exaggeration of the valuation, whether it be too expensive or too cheap. It's more closer to being fairly priced. So the valuation, in my opinion, is not a primary reason for selling Apple stock here. It's more has to do with those other factors I discussed. So to answer the question, should you or me sell Apple stock? I own Apple stock, by the way. I've owned Apple stock probably longer than Warren Buffett has owned it. I think I've owned Apple stock since 2014 or something like that. And so I've got a large capital gains embedded in my Apple shares also. But I'm not going to be selling my Apple stock because Warren Buffett is selling Apple stock. What Warren Buffett does has close to zero implications as to what I do with my investment portfolio. Sure, I follow what Warren Buffett does because he's arguably the greatest investor of all time, and I try to learn from his decision-making and his decision-making process, but I don't follow his picks as some investors might. And I would advise that many of you don't just follow Warren Buffett's picks or anyone else's picks for that matter. You can see them as suggestions and then do your own due diligence and then come to a conclusion. That would be more prudent than just selling because Buffett is selling or buying because Buffett is buying. And this situation is no different. So I would say, no, this is not a reason to sell Apple stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.